points are that we had another strong quarter. The cash that we generated from our operations, which is for me the key metric that our investors, our shareholders should be measuring us on, was 11.6 million. So that was pretty strong. The first quarter of 2025 this year was our lowest production quarter. We had our maintenance shutdown in the first quarter. That's a regular event at Amerigo. So even with that lower than normalized quarterly production, the performance was pretty strong at 11.6 million operating cash flow. In terms of free cash flow, we had 4.8 million. We returned 4.6 million to our shareholders through the quarterly dividend, through buyback. So it was a very strong quarter. We're on excellent footing for April and May, and the copper price has performed really well. So it's so far it has been a strong year, and we expect for these conditions to continue. Well, you know, for me, production growth as a strategy on its own is an incomplete proposition. It just doesn't bring anything to the table if it stands on its own. At Amerigo, we have outperformed, as you mentioned, because of two things: a focus on generating operational cash flow, and then taking the right capital allocation decisions. That's where our CRS, our capital return strategy, has come into place. It's well designed, it's flexible, it is timely, and it has proven to be quite reliable. We have maintained a very clear focus on maximizing long-term per share value. We have avoided growth for the growth of sake, and have said no to marginal opportunities. So just keeping on track at what we do and doing it well, and having the right capital allocation decisions behind us has been critical for us. It's very simple. We do not have a growth capital requirement. We do not need growth capex. We have overcome that stage. So in and by itself, that's a huge differentiation between Amerigo and other more traditional copper operations. So where does that leave us? It leaves us with three other buckets of capex that are quite important, but that have less capital requirements. We have, of course, sustaining capex. Sustaining capex is fundamental. You need to keep that plant, you need to keep your operation in top condition. That's what allows us to have operational continuity. That's what allows us to meet or exceed our production guidance year on year. So sustaining capex is important. We also have done, as you know, a lot of risk mitigation capex in the past years. A dollar spent on risk mitigation, first of all, at least lets you sleep well at night, but it also has a significant return on investment when things go wrong and you have advanced that decision making and you have protected yourself before you got hit. That's a big plus. And of course, there's also optimization capex. We have been working on getting additional smaller projects within our operation to improve our efficiencies, to improve recoveries, for example. So those three categories, sustaining capex, risk mitigation capex, and optimization capex, are all part of the equation. All in all, they are not that capital intensive. Just to give an example, for this year, 2025, we have 4.4 million in sustaining capex, 4.4 million in 5 optimization projects that are going to be quite interesting, and that we'll see how what contribution they have to operational efficiency and additional recoveries. And we also have 4.2 million in our maintenance shutdown and strategic spares. So it's not a huge amount of capital, and that's why with the debt repayments being completed this year, essentially most of the capital that is generated is free cash flow to our shareholders. They are both important. They both will happen at current copper prices. We like both, and we will not privilege one or the other. There are some timing considerations. We have, for example, indicated to the market we don't want to have annual dilution. So for us, it's important to complete that minimum level of buybacks. We've already done that this year, so that check mark is complete. We will continue buying back shares, and as I've said in our earnings call and everywhere I can, doing the performance dividend does not mean we're not going to be doing share buybacks and vice versa. Both of those additional distributions have room to occur at current level of copper prices. And we've been speaking a lot for the last years in terms of what is our view on the fundamentals, the structural fundamentals of the copper market in terms of supply and demand. Those haven't changed. Those seem to be getting more ratified every year, not fading away. And right now, if you're talking 2025, what are some of the studies out there telling us in general terms, just two simple numbers to remember? Supply is expected to decrease by around 15%, just on the basis of declining grades of the major producers that have already mined their best area. So supply is coming down 15%, give or take, in the next decade, and at the same time, demand is expected to increase by 27% from whichever additional sources are coming. These are just, the easiest numbers to remember. If you have a market that's planning to grow by 27% in a decade, and your supply into that market is planning to decrease by 15%, under current conditions, you obviously have a significant imbalance, and I think that's what we're starting to see. Our team's priorities are basically the same that we've always had for the last years. Our fundamentals are to produce copper and to produce margin, operational cash flow, in a safe way. We do not want to have accidents. We do not want to have environmental incidents. When you have those four basic pillars in place and everyone in the organization is focused on achieving them, essentially what you have is a compounding machine. Amerigo becomes a compounding machine for the benefit of shareholders. We do not want to interrupt that compounding process, so we look at our risks ahead of time and try to mitigate them or avoid them as best we can. And of course, we will continue to maintain our discipline in terms of financial and capital allocation. We want to be debt-free by the end of the year. So those are the objectives that each and everyone in the organization is focused on.